Hi, and welcome. You're listening to the X22 Report. My name is Dave, and this is episode 1264A, and today's date is April 26, 2017, and the title of the episode is, The Stock Market Has Gotten So Big It Has Now Passed the 2007 Market Bubble. Now, before I get started, I just want to make an announcement. I uploaded an interview with Mike Baloney. It is on the X22 Report Spotlight YouTube channel. So if you go over to YouTube and you type in X22 Report Spotlight, it will bring you to the video. Or you can come over to the X22Report.com site, scroll down a little bit, look over to your right-hand side. You'll see the video there, and you can play it right on the site. Or go to NewsSentinel.com. Same thing, scroll down a little bit, look over to your right-hand side, and you can play the video right on the site. Let's get into the economic collapse financial news. Now, we are seeing bubbles everywhere, and it's not just here in the United States. We're seeing it in many other countries. Canada, for instance, the Canada Mortgage and Housing Corporation, well, they issued a report warning that there is a strong evidence of overall problematic conditions. What does that even mean? Well, in the report, the housing regulator again warns that while conditions in Canada's housing market are showing some signs of improvement, the official overall rating from the Canada Mortgage and Housing Corporation will be held at strong evidence of problematic conditions. Evidence of overvaluation has increased from moderate to strong in Victoria, as fundamentals are not keeping up with higher prices. There is also moderate evidence of price acceleration and overheating, leading to strong overall evidence of these problems. And it looks like what they're saying is we are moving into a bubble territory. And we are seeing bubbles pop up every place where things are overvalued, overheated, and these bubbles are getting to pop. And what we're seeing here in the United States is a housing echo bubble, which exceeds the 2006-2000 bubble peak. And if you need some evidence that the echo bubble in housing is global, well, we need to take a look at Sweden's housing. And a funny thing often occurs after a mania-fueled asset bubble pops. An echo bubble inflates a few years later, as monetary authorities and all the institutions that depend on rising asset valuations go all in to reflate the crushed asset classes. And if we look at Case-Shiller Home Price Index charts for San Francisco, Seattle, Portland, Oregon, each now exceeds its previous housing bubble the first go-around. And here we are in the second go-around, and we're starting to see that it has topped that. Now, housing bubbles take about 5 to 6 years to reach their bubble peaks, and about half the time, well, to retrace much or all of its gains. And when bubbles are followed by echo bubbles, the bursting of the second bubble tends to signal the end of speculative cycle in that asset class. There is no fundamental reason why housing could not round trip to levels below the 2011 post-bubble that we saw the first time. Now, Fannie Mae, well, they just put the pedal to the metal, and they just got their marching orders to spread more debt. Because remember, the central banking system works by spreading debt, inflating the bubbles, blowing them up, and we can see right now that Fannie Mae, well, they have introduced an innovative solution. They're allowing student debt-laden millennials to buy a home. How are they going to do this? Well, they just changed the rules, allowing millennial borrowers, among other things, to simply exclude student loans, credit cards, and auto loans that are paid by someone else when they apply for a new mortgage. And as an added benefit, taxpayer-subsidized mortgage loans can also now be used to repay student debt. And this, of course, is going to work out great for everyone, especially the taxpayers. And this is a really good idea for the millennials who are already suffering the financial consequences of having too much debt, who really can't find work or anything like that. And this is all about inflating the housing bubble once again. And we can see right now, there is a race on right now on who is going to bring the economy down first and who it's going to be blamed on. Now, the central bankers, they've already started the process of bringing down the economy. They started raising the interest rates, and they're inflating the bubbles, and they're trying to bring this down. Now, they want to control this entire system coming down. Why? Because if they can control it, they can blame whoever they want. They have the ability to control the narrative of how this happened. They can control on how they want to proceed going forward by maybe lowering the interest rates, going negative interest rates now because we're in trouble, creating more currency, and basically to have the control to start the system over again, to say that this is why you need the central bank. Now, we have, on the other hand, the Trump administration, those individuals who are behind the scenes saying, you know something, we need to get rid of the central bank. We need to take charge right now, where they are blowing up the bubble and trying to pop it before the central bank. This way, they can call the central bank out on it. And everything that Trump is doing is moving in that direction. He's not going to be bringing back jobs. He's not going to make the economy better. But every act that he does now, which is what we're watching, these are the indicators. I mean, if he strays from this, we know something else has changed, something else is going on. But everything that he does now is going to be completely different than what you thought was going to happen. Because what he's doing is he is basically working undercover, just like a drug agent or FBI detective who goes undercover into some type of criminal ring, pretends they're one of them, works with them, gets them to trust what he is doing or she is doing, and then comes after them. This is exactly what Trump is doing. And this is why it looks so strange to everyone. Because in the beginning, he did try this other method where he came out and said, okay, we're going to bring back jobs. We're going to change this. And guess what? It didn't work. You can't do it. So you need to go undercover. You need to work in this way. But there are certain little hints to show us that he's still trying to do what he said he was going to do. And he's preparing this for when this whole system comes down, where these individuals can gain control of the system and get rid of the central bank. Now, the Trump administration, well, they are preparing an executive order on withdrawing the U.S. from NAFTA. Now, the deep state wanted NAFTA. NAFTA did not help the job situation whatsoever. Actually, it removed the jobs from the United States. And we can see there's a draft order. It has been submitted for the final stages of review, and it most likely will be unveiled maybe in the next coming weeks. So that's something that we need to look at and watch. Trump has come out with his tax reform plan. We know this is not going to pass whatsoever, but he came out with it to show that, yes, he's looking at cutting taxes right now, and we know the deep state, the central bankers, they don't want any of this. This is not going to help their situation. And we can see right now that the bubbles are growing. Right now, the U.S. stock market is officially in a massive bubble based on the one valuation metric that cannot be faked. Corporations, well, they can engage in any number of accounting gimmicks to juice their earnings. Cash flow, dividends, buybacks, they can do all this kind of stuff. For this reason, the PE, the PCF, and the PDY ratios are all suspect when it comes time to value a corporation. Sales, well, that's a little bit harder to manipulate. Yeah, I guess you can go into the books and just say, we made this number of sales, but it's going to be pretty darn obvious when you do this. So it's very difficult to do. Either money comes in the door or it really doesn't. And if a company is caught messing around with sales numbers, well, someone sometimes goes to jail. For this reason, price to sales is perhaps the single most objective and clear means of measuring stock valuations. Now, this metric, above all others, you can point to and say, this is definitely accurate and has not been messed with. On that note, as Bill King recently noted, today the S&P 500 is sporting a price to sales ratio that is massively higher than it was in 2007 and is only marginally lower than it was during the tech bubble, the single largest stock bubble of all time for most measures. And here we are today. There is simply no way to look at this and not call it a bubble. It is well above the 2000 bubble and just slightly smaller than the tech bubble. This bubble, like all other bubbles, will burst. We know it will. It's a fact. It has done it throughout history. And we can see that the central bank throughout time, well, they pump the market up, they sell it off, the retail investors come in, the speculators come in, and they bring the system down. This is what we're seeing right now. But this time, well, it's a little different because the central bank realizes that they need to bring this down, and this time the entire system is coming down, and it's a race of who's going to win and who is going to control the narrative of the story. Now, we know that Trump said he's stepping back on the budget for the wall, and we know the budget of the wall is so tiny and minuscule compared to everything else that the House has to sit here and extend the negotiations for a week to give them some time, because they can't do this, in the time period that they have right now. Now, of course, they're going to pass it. Everything is going to go forward. They might shut down for a little bit, but we can see right now they want the free money coming in. They want all of it to happen, and Trump wants it to happen. He wants Congress to do this. He wants them to pass this. He wants the bubbles to pop. Now, Rand Paul said something very interesting. If you want to drain the swamp, you have to take away money from Washington and send it back to the people. Now, this is very interesting, because how do you do this? Well, with the way the system is today, can you just say, okay, you know what? We're going to have a budget, we're going to slash programs, and, everything's going to be fine, and we don't have to worry about it. Well, it's not going to work because, first of all, Congress, who's still controlled by the central bank and corporations, they're not going to let it happen, because we know they're not working for the people. So what do you have to do? You have to take the money away from Congress. How do you do that? You get rid of the central bank. What's the purpose of the central bank? There is no purpose to the central bank. What? They're managing the economy of the United States? They're not even part of the government. Their mandate is not to support the people and help the people and help the country. Their mandate is to themselves, to profit, to spreading debt. And all they were supposed to do was create currency out of thin air. There is absolutely no reason for the central bank. And the only reason it's around, and the only reason why it's not audited, because the central bank has free money. What can you do with money that is created out of thin air? You can pass it along to those in government. You can pass it along to banks. You can pass it along to corporations. And they all do what you want. And once all these people are bought and paid for, it's very difficult for them to do anything else but to do what the central bank wants. And this is why you see that Congress, it really doesn't work for the people. Now, during this whole time, we see China, we see Russia, we see India. They are adding more and more gold. Actually, China's net gold imports via Hong Kong more than doubled in March to 111.6 tons. Russia is doing the same thing because they realize that the dollar will not exist anymore. When this system comes down, that's it. The whole thing has to be restarted. The central bank will not exist, and there'll be a new currency. What it will be, we don't know right now. Will it be backed by gold? Well, it's starting to look like that, or gold might play some type of role in this, because we can see that Russia and China, they've been accumulating as much as they possibly can. And something else very interesting, every time the United States, the central bankers have gone into any of the countries, Libya, Yemen, the first thing they do is they take the gold. Very interesting, because they've been telling us that gold is a barbaric, relic, and it's really not worth anything. Why do they always take the gold as soon as they get into these countries? Because they know that is the real wealth. This paper and ink that they create, which is not paper and ink anymore, they're just pushing a button on a computer, but something they create out of thin air, this is worthless. This is why they always try to trade it in for real hard assets. This is why they put countries into debt and they go in and they steal their assets for pennies on the dollar, because that's what they really want. They don't want paper and ink. They're already creating that. They want the hard assets, gold, silver. They want land, ports, buildings, you name it. They want that. That is the real wealth. So where are we headed right now? Well, there's a race right now to crash the system. And the winner will control the narrative of the story. The winner will reset the system. Now, we are hoping that it's not the central bank, because if it is the central bank, guess what? They're going to restart the central bank. They're going to start this nightmare all over again. If it's Trump and his administration that I see right now, he's going to make a move to get rid of the central bank. And this is something that we are watching. Listen, everyone, thanks a lot for listening. Be well, be safe, and especially be prepared. Thanks a lot.